What's going on, everybody? We are reporting live from the Digital Asset Summit here in New York City. Super excited to be joined today by Matt Hougan of Bitwise. And we're following up from a conversation that we had a few months ago where we started to outline what are our key views for 2025. So I thought I'd grab Matt from the crowd. He's been a busy guy today, but we figured we'd sit down, catch up, hear what's going on. And so it's great to have you here.
Thanks for having me. It's a great event, a lot of people, and excited for this conversation.
Yeah, the energy is incredible here.
It really is.
It's really exciting. People are excited. There's a lot happening. We're going to tie in a lot of our conversation to what's going on with the digital asset side of things and stablecoins we were just mentioning before we started recording. But before that, I do want to ask you, what's your general macro framework right now? How are you thinking about the interplay of what's going on the fiscal side with Trump and everything? We have the FOMC meeting tomorrow. What's your outlook there? And how is that all starting to, those cross currents come into your outlook on digital assets?
Yeah, so when I think about the value of any digital asset, let's take Bitcoin, for example. I think about two things. I think about where I think it's going long term. Like, let's say I think Bitcoin's going to $200,000 by the end of the year. And then I think about the discount rate back to present value. The discount rate is based on the economic uncertainty in the market. I think what's happening right now, when you look at the macro condition, it's actually playing into the long-term case for Bitcoin. So it's making me more bullish long-term because there's economic instability. The government is mucking with the economy. All the things Bitcoiners hate makes that long-term price target go up. But it increases the discount factor, which is why the market has pulled back. So as a long-term Bitcoin investor, I see that as a gift. If I'm looking at the short term, though, it could get worse before it gets better, right? If the government keeps sort of pushing the risk curve down and we start heading towards recession, that's probably not good for Bitcoin in the short term. So long-term, extremely bullish. Short-term, some trepidation. And we'll have to see what comes out of Powell's voice, what comes out of other people's talks in the weeks to come.
It's always this interesting one, right? Because, as people that are believers in Bitcoin, we often view it as a hedge on, monetary inflation and increasing liquidity. But then we hear what's going on the fiscal side and they want to decrease deficits. But at the same time, there's also a lot of governmental inefficiencies. There's a lot of, I don't want to go as far as say, fiscal chaos, but we're not totally sure on where things are going to land with tariffs. So how do you square up this idea that, there's a lot of positive fundamental tailwinds for Bitcoin as an asset class, but if we're actually pulling back on fiscal deficits, wouldn't that be sort of a bearish situation?
Yeah, I think I'm glad that you raised that. I don't think crypto talks about that enough. It would be bearish, but I don't believe it. I mean, I basically don't believe it. So, look, we're at a $2.5 trillion deficit right now. I don't think there's any realistic way to trim that to $1 trillion or less, which is where you have to get to if you start to want to sort of support the dollar long term and make Bitcoin have less space in the world. So it is absolutely true. If we see real austerity and we somehow trim that deficit substantially, that's a headwind to Bitcoin. I just don't believe it. I feel the same about sort of recessionary odds and the idea that we're going to go through a period of austerity. That also would be bad for Bitcoin, to be honest. Like that's part of the same equation. But I don't buy it. I think the government will blink at the end. So I could be wrong. And if I'm wrong, it's going to be a challenging period for Bitcoin. But I think the government will blink on austerity. I think the government will blink on interest rates. I think ultimately it's going to play into the long-term case of Bitcoin.
Yeah, I mean, you're definitely on the right side of history of, if you're trying to fade the idea that they can't kick the can down the road, they always kick it. They always find a way.
They always kick it. It's the easy button. And no one likes, politicians don't want to be unpopular. They can only be so unpopular for so long. You're already seeing them kick that can in Germany. You're already seeing them start to kick the can in China. I don't think the US is going to be the only one that tries to hold the line. We've seen other individual nations try to enact austerity against a world that's easing. And that's just a very uncomfortable position. So I think once they started hitting the easy button in 2008, I don't think they can stop. So I think they're going to blink eventually.
I'm glad you brought up the rest of the world because there's this really interesting discrepancy right now that's happening. So to your point, Germany's talking about a $500 billion fiscal impulse. They're talking about taking off the debt brake. We got China coming in size. We got, Japan has a pretty strong economy right now, all relatively speaking. So that's all going on at the same time that it's sort of, we can say short term it's the opposite in the US. I am with you that, medium term it's somewhat inevitable. But how do you think about this idea? Because, when we talk about digital assets, so often we have this US centric view, but when you, to your point, the rest of the world is in a very positive liquidity tailwind for the next while, for sure. So how do you think that reflects into Bitcoin's correlation to risk assets? Is that, okay, if we assume that, NASDAQ and the Qs are going to continue to bleed lower, but the rest of the world is going gangbusters on liquidity, how do you think crypto assets start to reflect that? Are they going to take up the mantle of what's going on in the rest of the world? Because it's a global asset, right?
Definitely.
Or does it get headstrong by the correlation to the NASDAQ?
No, I think that correlation is really a short-term correlation, right? Like it's a dip and rip sort of situation. I think we're seeing global monetary supply at its all-time high or very close to its all-time high already today. And I think that's accelerating. Ultimately, if you look at the history of Bitcoin, it just needs somewhere to be in a positive orientation to get that market really moving ahead. And like you said, I think when we look overseas, you already see that happening, and I think it'll happen in the US. So I think it responds to that global phenomenon. I'm much more bullish on Bitcoin than I am on the US stock market in the short term. It is a global asset, so it will be supported around the world.
Yeah, very well said. Okay, so there's this whole situation going on with the fiscal, which I would characterize as we're trying to find efficient and more novel ways to monetize debt and refinance debt. That's really the big question. We hear, Scott Bessent and Trump, they're squarely focused on bringing down 10-year yields, and we're all trying to speculate on what the core reason is. You could, reflect that in just, more affordable mortgage rates, or is it, if we lower yields, all this, we've been issuing a ton of short-term debt as opposed to long-term debt for the last 3 years. If we can get those yields down and refinance it, that's going to be a great situation for the fiscal situation. And then, we're talking here at a digital asset summit, so let's bring in some of those dynamics. But talk of the town as well as stablecoins, right? We had the other crypto summit that happened a couple of weeks ago in Washington, and there a lot of the themes there were about stablecoins. So I want to ask you is, how do you see the stablecoin innovation coming into that discussion of who's going to buy the debt?
Yeah, it's a huge piece of it. It is this gift from the gods to the U.S. Treasury. Where are you going to find $1 trillion of new demand for U.S. short-term debt? The best single answer is stablecoins. Other countries are pulling back on their purchases of U.S. debt. I don't think the U.S. consumer is ready to step in and fill that gap. You need something to, and lo and behold, we have this stablecoin boom that's already starting, and I think it's going to accelerate tremendously. What that means is stablecoin legislation is a lock, right? Democrats want it, the executive branch wants it, Republicans want it. It is that fundamental source. I think it'll be interesting to see, how wide, how much duration do they allow into these stablecoin assets? What does that look like? But yeah, it's a multi-trillion-dollar sink for U.S. debt over the next few years, and there ain't that many of those around. So I think the U.S. is going to seize that and really lean into it.
Do you think it's consensus that everybody in government understands that? Because you look at the last couple of years, and originally there was a lot of fight against stablecoins, and was that just a pure sentiment political play, or is it just we're slowly seeing them understand and come to terms with the fact that this is going to be the next big marginal buyer of debt? Where do you feel like that sentiment is currently?
So you still have Elizabeth Warren and others who are strongly anti-stablecoins for reasons I don't understand. For what it's worth, I think stablecoins are a strongly progressive tool that can lower costs and increase access to banking and lots of sort of core progressive goals. So I really don't understand that. But I think the dominant majority already supports stablecoins because they see the need for U.S. debt purchases. They see the ability to export dollar demand around the world, to increase, dollar's place as a reserve asset. That was on the outs, right? That is naturally fading over time. This is like a booster shot that may extend that duration for a long period of time. So it's such a massive win for America that I think you are starting to see pretty mainstream adoption on both sides of the aisle. I think it'll sail through both houses of Congress.
I see the line for it making sense for the U.S. to really support stablecoins. Where does the Bitcoin Strategic Reserve fit into that framework?
Here's the amazing thing. People used to ask me, what are you worried about in Bitcoin specifically? And most of the objections, they were easy to deflect. Environment, easy to deflect. Criminal use, easy to deflect. Valuation, easy to deflect. The one that wasn't easy to deflect was, will the government ban it? right? Because from a certain perspective, it's a challenge to fiat currencies. And why would the government allow that to emerge and evolve? The absolutely incredible thing about the last 6 months is we've solved that risk. We've somehow co-opted governments. We've started this game theory where they need to have exposure to this asset that's emerging as a geopolitically important asset. And once they do that, they are not going to ban it. So people say, why would the government do this? They're sort of sowing the seeds of their own demise. But of course, the answer to that is they have no alternative, right? They understand. Cliff Asness from AQR wrote this incredible piece anti the Bitcoin strategic reserve. And he said it would be as if the US government built a Chinese yuan strategic reserve. But of course, that's exactly the point. No, it's not that. It's the idea that there may be something other than the dollar. If we don't make it Bitcoin, it's going to be another nation's currency that fills that role. And so I think the US government realizes that an apolitical option is better than an arch enemy's political option. And so I think that's where it fits in. But it's absolutely incredible. For a Bitcoin investor, it dramatically removes the biggest risk in Bitcoin and makes it much more attractive. I've said this before. I think it's the single best time in history to buy Bitcoin from a risk-adjusted perspective because we've removed that risk. It's really an incredible development.
Yeah, I totally agree. And to your point, it feels like a lot of the reason there, because I see the argument for any emerging market country like El Salvador to buy Bitcoin. That makes a ton of sense. But it wasn't in my playbook to see the US be one of the first to go because they're the reserve currency.
Right.
It does make sense to me for them to buy it for the basis that if we fast forward in 10 years and it continues to build up how it has been doing, and it's like, okay, well, we need to own some Bitcoin because if we don't, we might lose reserve currency hegemony. But do you see it actually strengthening the reserve currency hegemony for the US? Obviously, I see it for the stablecoins, but what about for Bitcoin?
Yeah, that's an interesting question. I mean, I think there is that argument in the same way that like having gold reserves sort of helps ensure that there's the strength of this of the US dollar. But I don't think that's the core basis for why the US dollar is the world's reserve currency. So I think it's helpful. I mostly see it as this hedge or as this way of sort of pushing Bitcoin to be the secondary solution beyond the dollar. Right? It's a way better world for the US if the dollar is the reserve currency and the alternative option is apolitical than if the dollar is the world's reserve currency and the alternative option is the ruble or the yuan. Right? Those are bad worlds. So you could close your eyes and shut your ears and stuff and pretend that there won't be an alternative, but that's foolish. I actually like the idea that we're sort of leading down the path toward maybe there will be an alternative, but let's make it apolitical rather than from one of our adversaries. I think that's a better path.
Yeah, that makes sense to me. Okay, I want to continue this line of thinking of applying these innovations that we got going on in the digital asset industry and thinking about how do they co-integrate with the macro landscape in the TradFi world. So we haven't talked about anything other than Bitcoin and stablecoin so far. It feels like the rest of the industry is trying to figure out what's next for it. So we have Ethereum that's been struggling. We have Solana that went on a huge run over the last year and a half and now is sort of thinking about what's next. So what's your state of play for the other L1s and what's going on there and any sort of co-integrations with the traditional finance world?
Yeah, so I'm excited about where the L1s are. When I look at them, over the last 2 years, a lot of people are sad about what's transpired. I think it's been incredible success. We survived an extinction level fraud event, right? Like a meteorite killing the dinosaurs level fraud event. We reduced costs by 99%. We increased throughput by like 10,000x. That's a pretty good couple of years. I think they may struggle from an investment perspective until we see a real uptick in stablecoins, in tokenization, and institutional DeFi. But I actually think if you look underneath the surface, that last one in particular is looking pretty alive right now. DeFi TVL, activity on Aave, Uniswap, DEX volumes are doing really well. Many are at new all-time highs. I actually think the next, the most immediate area to rally may actually be direct DeFi assets. And then that will eventually trickle into these layer ones. So it's not as bad as people make it out to be.
Yeah, if people just want it, to all happen all at once. It just seems these days, it's because of the excitement of everybody in this industry, but yeah.
Yeah, I also think, the way to think of it is we were so constrained by regulatory that we overbuilt infrastructure. And so we're at a point right now where the infrastructure is too good for the use case. And that's frustrating to people because you have low fee levels and low revenue levels, et cetera. The bull case is now that we release the regulatory brake, you could get faster growth than we would have in the past because the infrastructure doesn't have to scale with utility in the way it normally does. So infrastructure is overbuilt, and again, release the regulatory brake, and I think we could get maybe a faster bull market than many people think.
Yeah, I love the way that's put. And so much of our audience is, traditional finance audience on forward guidance. And oftentimes, the only time they'll ever hear about crypto is in a negative connotation. Things like, FTX, or lately it's been the meme coin craze, Farcoin, all of that. But, that's sort of gone, to the wayside recently. And it feels like there's, we're here at a digital asset summit, an institutional conference. And, guys like you in the institutional side are extremely excited, while all this weird casino stuff seems to be just kind of going by the end of it. Do you see that trend continuing?
It's so funny you mentioned that. That's the biggest dichotomy in crypto right now. Like, crypto native degen world is in existential depression, and all of the institutional players coming into the market are like, this has never been better.
Yeah.
Right? We are on the cusp of a multi-year bull market, the scale of which you haven't even imagined. I think that's absolutely true, right? Look, I think the meme coins will always exist. I also think they were great stress tests of this infrastructure that we've built, and they showed it can handle real throughput. But, from an institutional perspective, when I look at, what's happening on stable coins, on tokenization, on institutional investment, those are all up and to the right. And I think that thesis is the right thesis right now. And the sort of crypto native world will come back to that in the future.
Okay, so I want to shift into, what your firm is so known for, which is ETFs. And
Yep.
I want to ask you a bit more of a nuanced question around it than just getting like your state of play update on it. And one of the big questions when they came forth is, first off with the Bitcoin ETF is, okay, now we're starting to get this, fragmentation of asset ownership. We have the ETF owners, and then we have the on-chain owners. And when you reflect on previous cycles, typically how it's gone is, people own the low beta first as they get confidence in the cycle. And as that starts to perform, they go further on the risk curve with the profits that they're making. So, they'll sell some Bitcoin, and that sort of leads to that top in the Bitcoin dominance. And, they go further out on the higher beta risk curve. And now we're in this completely different situation where it feels like that asset allocation is isolated from what's going on chain. So, you have this institutional money that is excited about ETFs and Bitcoin, but they're not the ones that are going to there's maybe some, but they're not going to be the ones that quickly flip and go party on chain. So how do you think about how that goes when we have this siloing of asset allocation? What does that do for the market?
Yeah, I think that's really well framed. I think there are two things that are going on, and they're going to have big impacts. The first is, I think you're absolutely right. A lot of the money that's going to come in is just going to be Bitcoin, or it's going to be index, like top 10, and it's just going to allocate a little bit over time. And I suspect that will mean that those assets will have lower volatility, lower pullbacks, a persistent bid, a persistent slope upwards, and that'll probably separate from assets beyond Bitcoin, maybe beyond the top like 5 or 10 assets, right? And there'll be a long tail that just trades very different, much higher vol. So I think that's very true. The other thing that I think is happening, which I think the world maybe doesn't reflect, is if you think about any crypto asset, there's sort of two pieces of its value. There's its utility value and its speculative value. Right? Bitcoin has utility as a store of value, and then we speculate it will be more useful in the future. In previous cycles, crypto was mostly speculation, right? The utility value, even of something like ETH or Solana, was relatively low. This cycle is the utility is more established, and that just means that we're going to have assets trade in different ways, like different correlations. I think the correlation between Bitcoin and Ethereum will be lower, substantially lower in the future than it has been in the past, because they're very different things. One is digital gold, one is like a new internet, right? Why should they be correlated? And so I think because these different types of investors, and also because we're in this utility phase, you're going to see much more dispersion, lower correlations, and we're not going to have the same cycles that we had in the past where you did sort of move down that risk curve.
And I feel like that makes a lot of, longtime crypto natives nervous. But I mean, I just think about, the equities market. Like, we're talking asset classes here, not just single stocks. So, in an asset class of equities, you don't have people do well on the S&P 500 and then decide to go trade pink sheet penny stocks, right? that's the way people frame up doing well in Bitcoin than going to buy a meme coin. So, it doesn't sound like it's necessarily a bad thing. It's just a maturing asset class.
It's a maturing asset class, and you're not entitled to roll those returns over into a higher beta asset. That's not like a thing that needs to happen. So, yeah, I think it's part of a maturing asset class. I think it means lower volatility on these large cap assets and lower correlations between assets, and it's more on each investor. You shouldn't assume that the playbook that worked for the last 10 years when it was mostly retail will work in the next 10 when it's going to be majority institutional. I just think different playbooks will have to apply.
Okay, so my last question here, when we're talking about correlations, I can't help to think about what's going on with gold right now, passing 3,000, while Bitcoin's struggling. It feels like the correlation between Bitcoin and gold is fluid. It changes over time. How are you thinking about that narrative right now of gold hitting all-time highs every day while Bitcoin struggles?
Oh man, it makes me so bullish. I'll go back to where we started, where there are two things you have to think about when you think about the value of an asset. There's its long-term price target and there's its discount factor. What gold is telling you is that the long-term value of non-fiat stores of value is higher than it's ever been before, right? Just to make that concrete, a few years ago, if Bitcoin matched gold, Bitcoin would get to 800,000. Now it will get to 1.1 million, right? So Bitcoin is growing that TAM. It's just we're suffering because we have this risk asset element. But to me, what gold is telling me is that Bitcoin is going to follow that its addressable market has never been bigger, that its opportunity has never been bigger. And we're just going to catch up to that once the market normalizes from a risk perspective. So I see it as a leading indicator of where we're going.
I love it. I totally agree. That is a great place to leave it. Matt Hougan, absolute pleasure to have you here at the Digital Asset Summit. I know you had a panel earlier today. It sounds like it went really well. It's an absolute blast here this week, I got to say.
It's unbelievable. It's the best crypto conference of the year, and the best crypto conference I've been at in many years in terms of the level of people here and the level of conversations and indeed the energy. So thanks for having me.
Yeah, absolute pleasure. Thanks.
Appreciate it.